Deal-making between Western and China biotechs has been one of the bright spots of 2025 as the maturing biotech landscape in China converges with Western demand for innovative assets, leading to record deal flow. At the same time, the Hong Kong Stock Exchange has become the hottest market for the biotech sector at a time when the IPO window remains shut on NASDAQ. The themes of China's burgeoning biotech innovation, deal-making strategies, and green shoots of financing are central to what we here at BioCentury and at McKinsey and at BayHelix will be discussing with friends, colleagues, VCs, top deal makers from the West and East on stage, in the hallways and at the networking receptions of the BioCentury-BayHelix China Healthcare Summit this October. And McKinsey, once again, will be our insights partner. So on today's BioCentury This Week podcast, we've invited a few special guests to join us to talk about how China is, well, China's hot at the moment. Joining me are Franck, a senior partner at McKinsey, where he co-leads the firm's Asia healthcare practice. Ji Li, a former top BD executive at biopharmas such as Merck in Beijing, now known as B1. Ji is now a consultant on cross-border deals. And we also have Mike Patten, the recently installed Chief Strategy Officer at Harbor Biomed. Mike was formerly the head of equity and venture capital at BMS. And from the BioCentury side, we're joined by Josh Berlin. He's the head of BD for BioCentury, and VP and editor-in-chief Simone Fishburne, who of course is something of a fixture on both of our podcasts. Okay, I'd like to bring in Simone now to kick us off. Simone, you just completed an analysis of nearly 200 East-West deals. We will be digging into that in a bit, but I wanted to ask you up front, what are some of the key trends that you saw while doing that analysis?
Thank you, Jeff. And really, what fun to be on this podcast. I'm not talking tennis today, which most of our people know is a recurring feature, but I will say there are some really good Chinese tennis players coming through. But anyway, moving on to deals, right? Well, the reason we did this analysis is that, it's sort of axiomatic now that China is really a source of innovation. And so what we really wanted to do was to dig into the details underlying it and who's buying what and how much. And I'm just going to give you three highlights that I want people to think about. So for us and many people who read it, one of the big surprises is the numbers of Western biotechs rather than MNCs doing deals with China licensors. So it's well known that the MNCs, the pharmas, have been out shopping for deals, but actually 2/3 of the deal volume with China licensors was to Western biotechs. And I thought that was really interesting. So that's a new dynamic that is reshaping, I think, global BD. Not a big surprise, file under not a big surprise. The second thing, and that is the increase in number of deals. This is going back to the start of 2023, okay? But the increase in number of deals in immunity and inflammation, and more recently in obesity. And why is that not a big surprise? Because anybody, Frank, I know you're going to talk about this, anybody who's been watching China knows if there's a hot area, they are going to go in and they are going to get in fast and they are going to, you're going to see tremendous value created for all the reasons we're going to go into. And I want to point out that those obesity deals were mostly north of $2 billion in total deal value. So these are not nickel and dime deals, right? And the third one I'm going to file under, not a surprise for us, but maybe a little bit of a surprise for some people who still continue to believe that China is a sort of fast follower environment, the proportion of first-in-class assets in those deals. So first, what we call first-order innovation is coming from China. Anybody who thinks that that is not happening, head in the sand. So about 40% of the deals that disclosed a target were potential first-in-class products. The biggest group was new modalities, which means people, for example, taking a new, like a bispecific or an ADC to create a therapy that would be better than something where there's, let's say, a monoclonal or a small molecule. But the last thing I want to say is it does not stop there. A substantial number of the first-in-class assets were novel targets. And this is something I'm quite often asked, like, yeah, there's innovation, but do they really, explore new biology and new targets? And the answer is yes. And so China, I think it's not so much a questioning of the biology, but a question of the risk appetite. And so what we see is that China innovators are willing to take risks on new targets, and so are their licensees, the people they're partnering with. So I'm going to stop there, Jeff. Those are my three take-homes.
Excellent. And we'll tuck into some of the numbers and other ways in which you slice and dice those data in a little bit. But I want to bring in Franck now. Franck is a frequent guest on the podcast, and he has been instrumental in helping us put on several of our conferences over the years. And if you follow his LinkedIn, you'll know that he has been picking apart the different deals that he's seeing. It almost feels like every day at this point. And so, Franck, I'd just like to ask you, from your perspective, what are you seeing in terms of what's going on with these East-West deals, in particular with the larger companies from the West, the MNCs?
Sure, Jeff, and more broadly the team here on the podcast. Thanks for having me again. Always a pleasure to join you guys and share some of my thoughts. I think first, maybe it's helpful maybe to step back a little bit. I know that Simon talked about this new trend in 2025, or at least accelerating trend, I guess. And I know that JP Morgan this year was a wake-up call for many people in the industry. But for us, who've been following this for a decade now, this was far from being a surprise, right? We actually have seen heavy interest from some multinationals for quite some time now in China. I think what has changed is that this interest is now broad-based. Like all top 20 or top 25 multinationals are now showing interest in sourcing innovation from China and actually more broadly from Asia, and talk about it and are taking action behind it, putting boots on the ground specifically in mainland China. But we also see, as you said earlier, Simon, a lot of biotech companies trying to take advantage of the opportunity. If we step back, this is driven really by, I guess, converging trends that are a perfect match. On one hand, multinationals and biotech are clearly looking for ways to enrich their pipelines. We know that there's a significant patent expiry cliff coming up in 2030. I think by some estimate, over $200 billion of revenues will disappear. So that creates a need for companies to transform their R&D engine, including finding more sources of innovation. Clearly as well, geopolitics, and we won't talk much about geopolitics today, but even though it's hanging in the background, it hasn't yet deterred companies from taking action, right? They still see a path to actually sourcing innovation from China, and even the current US-China context. Also, quite frankly, the track record of the first deals in between 23, 24, even before that, has given more confidence to some of the earlier players that there was something real in China. And I would say that to some extent, a fear of missing out are starting to creep in the rest of the multinationals. And as well, a few success stories for biotech companies have created an urge for a broader set of biotech to jump in, right, and make sure that they don't miss something. And then let's not forget, on the local side, there's an urgent, acute need to find partners. And yes, the Hong Kong exchange is better, but frankly, it crashed. So it's just a recovery from a low point. Yes, the IPO window is open again, which is great, but local companies are still struggling to find means to support their development. And for them, the stream of revenues they can get from upfront payment, in particular in deal making, is vital. The Chinese market for innovation itself, while it's growing, is still not at the scale that you would need to support a full innovation ecosystem of local companies. Pricing is an issue still. Competition is cutthroat. It is very expensive to compete in China, which means that only at-scale companies can take advantage of that. So that's the context. Then what do we see and why do we believe this is actually a trend that will reshape the global biopharma industry? We see 6 reasons, actually. And my colleague in our China practice just released a report on that I will just give you a key takeaway. First, I think as Simon shown, this is way beyond oncology. This is expanding into new therapeutic areas. metabolism, neurology, immunology, etc. Two, it is beyond ADCs and mAbs. I think people talked a lot about the ADC power of China, but this is actually going now into next generation platforms, cell and gene therapies, RNA therapies, radioligand therapies, etc. So way beyond ADCs. It is also beyond fast following, and we start to see the cultivation of novel biological discoveries. China is catching up with Germany and Japan, for example, on the number of high-quality research papers that are cited in the top-tier journals. We believe that there is a potential for first-in-class assets to come from China, not today, August 13, 2025, but certainly in the near future. Beyond labor cost, China R&D is just faster, and as you know, speed in R&D is extremely important. Why is China faster? We looked into the topic. We think that they have re-engineered basically end-to-end how to develop drugs from discovery to clinics, and they do that in a very systematic way. They leverage a very agile clinical research ecosystem that has no equivalent in the world, and also they apply a focused execution mindset that is also quite unique if you think about their work ethics and their ability to really mobilize beyond clear goals. Two more points.
Frank, let me jump in because I actually wanted to ask you and the other panelists this. We know about the energy in China and the commitment, but I wanted to know a couple of things. One is, how much do you think this is a feature, the deal making, the success of the ability to go very fast into the clinic? And how much of a sort of leg up does that provide China researchers over their counterparts in the West? And then the other question is this: there's sort of this notion that I've heard that there was a lot of money that went in 2020. This is sort of everybody, you all may want to respond to this. A lot of money went in 2019, 2020, 2021, created a lot of new companies. And now we're actually starting to see the fruits of that money in these companies, bringing assets and programs that can be partnered. So who wants to pick that up? But I don't know, Frank, if you've got a response, and then maybe I've ruined your plan, Jeff, I know. But...
No worries. I was just very quickly touch. I got your point. I probably went over a little bit. But on point of number 5, clinical trial, China is expanding beyond China, right? And that's very important to also make the assets more attractive for global partners. And also beyond the bench, China is scaling robotics and AI. We probably won't talk about that today. And to your two questions, I think the speed is the name of the game, right? When assets actually have limited differentiation, when China is able to bring assets that are really competitive on many aspects of their clinical profile, the speed is the name of the game. We believe that the speed of China means that, unlike what we have seen in the past, where you basically need to be in the top 3 to reach a market for any new type of drug class, and maybe the speed of China will allow more competitors to join the market, and we may be seeing that in metabolic already, for example, and we saw it in PD-1. On the maturation of the pipeline of companies that were created a few years back, I think that's both right, but we also see companies that were set up very, very recently actually come up with interesting assets that are also available. And there's also a large number of companies who actually have failed in the Chinese ecosystem. We talk less about those ones, but there are some as well, right? It's not all success.
So Frank, just to follow up regarding the speed of China, right? So that generated 2 general responses from different categories of company. In the multinational circle, there's a belief that they pretty much give up to do anything internally. If something gets published in a paper, if they wait for the internal bureaucrat system to get this up and running, the joke was, you go to China, they give you a clinical candidate already. So they pretty much resign to the fact that you go to China to find these things. But on the other side of the ecosystem, the earlier stage venture capital incubating new company, it generates fear because they do not want to disclose what they're working on, knowing once that becomes the public domain, they will be swamped by dozens of projects that go past them. So that's a really interesting effect that have. In my observation in the last, I would say, year or two, it's become very obvious. It is indispensable for China to be part of our ecosystem, right? But that thing has evolved in the last, I would say, 6 to 12 months. What you can see is, beside the biopharma, biotech that you've seen that has been funded in the last 5, 10 years, the major domestic pharma in China has entered the fray. And these people are much more well-financed, much more capable in terms of clinical development. So all of a sudden, they're generating post-POC or even later stage program that has created fierce competition among the MNC try to acquire these programs, try to fill their late-stage pipeline gap. And that is something really become competitive in the late-stage deal making. In contrary, in the early stage where we talk about a lot of the NewCos and VC-backed biotech, those remain pretty much in the favor of the buyer, if you will, because there are hundreds of companies competing in the same space. You really need to be standing out to be a winner, like what Harbor has done recently, right? So it's become a two different trend I see. They're both competitive. I think in the late stage, some of the program has generated or command very little discount. I would argue they're starting to generate premium. While in the early stage, you can still find bargain, at a discount, if you will.
Gee, this is Josh. Maybe I'll jump in also. And Mike, I wanted to sort of turn the conversation to you as well, because one of the things I think we're seeing is also a move to strategic collaborations as well. There's been a couple of really high-profile examples of that. And I think one of the earlier ones, I'm saying early, but only 5 months ago, that's, I guess, China speed for you. But I thought, one of the earlier ones, at least this year, that sort of pointed towards a strategic collaboration was that deal you guys did with AstraZeneca back in March, I believe it was. So can you tell us a little bit about that deal and what the thinking was for Harbor and how you see that evolving in the, we're going to see more of these sort of strategic collaborations, in other words.
Absolutely. And thank you, Josh, and the BioCentury team. It's a pleasure to join you today. And indeed, this is really exciting times at Harbor, as you've highlighted in the discussion, but also in your recent analysis. And yeah, I think the AstraZeneca, our collaboration with AstraZeneca is really exciting, obviously for Harbor, but is also significant for the region. 5 months ago, and really being the first major collaboration of its type in being a multi-program, multi-year research collaboration focused on the discovery of the next generation multispecifics, focused on also oncology and immunology. And in terms of the structure of the deal, this is a 5-year initial term with the option to extend by another 5 years, and also included a significant equity investment of over $100 million. So really representing significant commitment to the relationship and also the future of Harbor by AstraZeneca. And you mentioned this was 5 months ago, and really that was sort of the marker of deals to come. And really, as we're seeing, has just been the beginning of significant collaborations, not just for Harbor, but also for peers in our region. And as mentioned by Franck and G, I think G mentioned about China speed, that we're seeing a rapid evolution of these deals and the collaborations as those groups who are really sophisticated in deal making and looking at how the region can really support Western development and other regions, that I think we're going to see aspects of the stage of the deals. And so we talked about clinical research and how China and working in China can help leverage that. And I think we'll see more and more of that being a key component of collaborations going forward. And that we will really see a real shift away from these transactional one asset programs to multi-asset collaborations as we go forward. And so I expect that when we meet again in a year's time, we'll be talking about completely different deal structures.
So Mike, that is interesting, because one of the things that we found when we looked at this analysis, as Jeff said, it turned out that there were 198 deals, right? Now, about 90% of them were focused on products. They may be multiple products focused on products, but a growing trend is actually partnering to what we call enabling technologies. So you might go and license an antibody in order to make an ADC. We're starting to see much more different kinds of deals than exactly what you said, not just go in, get the asset, go home kind of thing. Actually, I have a kind of a question for you all. What we hear here all the time, we hear from VCs and we hear from farmers. I'm spending much more time on the ground in China. So in China, are there VCs and farmers like walking around notably much more than before? Is it something palpable that you see? Is there that kind of energy walking around and interest? When you did your deal, was there a lot of inbound?
Well, I think absolutely. I think everybody has some presence in China, and I think certainly from my experience, I think you're seeing that companies who don't have an established footprint in China are finding out very quickly that they need to have that to be successful. I'm sure G and Frank have observations on that as well.
Wait,
Yeah.
or they need to come to BioCentury's conference, right?
No, but it's very clear, Simon, and being in our position in China, we get requests frequently from some of our clients or non-clients who ask us, okay, what's the best way to set up a BD team in China? And we see as well many of our colleagues or ex-colleagues being actually poached or approached to fill this type of position. We also see almost on a weekly basis, some of the bigger names hold annual biotech conference in China where they actually bring together the network of biotechs and present what they do as a company, what they want to do, which is, as you mentioned, beyond just sourcing particular asset. It's now about sourcing technology, and also the next frontier, I think, is about partnering to actually impact the way the big pharma works in R&D. I think there's a lot of interest for some of the global head of R&D worldwide to figure out what is it exactly that China has as a secret sauce that could help transform the global R&D organization, which are often seen as a little bit bloated, inefficient, and maybe in need of an injection of China speed. And that, I think, to me, is one of the most interesting topics that will play out in the next few years.
Just to follow up in terms of the on the ground, I'm sure Frank can tell you. I mean, the joke is if a particular week, if there's not an MNC in town in Shanghai, something is wrong. That was the joke. So they go through every week and plus all kinds of local partnering conferences. So it's really a super active scenes there. But getting back to regarding technology or platform collaboration, I think if you look at some of the newly emerged platforms, next generation RNAi, in vivo CAR T, you name it, these are seeing actually the Chinese biotech are at the forefront. The gap between them and the Western counterparts are, I think narrowing, or even in many cases they're leading. In the case of in vivo CAR, I'm sure you guys saw that. So I think the ecosystem will continue to evolve, and I wouldn't be surprised, like Simone said earlier, the truly first-in-class asset will emerge and more as we go forward.
So, G, let me ask you this. You're dealing with a lot of clients. You're involved in a lot of negotiations with deals. Ones we've seen the press releases on. I'm sure there are a bunch of others that didn't come to fruition. But how are you seeing the deal terms evolving over time? As the demand has continued to increase for finding assets, de-risked assets in China. Is that leading to China biotechs being able to get better terms? Are there things you're seeing in the negotiations that are, maybe different now versus a year ago or 6 months ago in terms of leverage on deal terms?
Yeah, no, as I said earlier, especially these sort of late clinical stage assets are very rare. Oftentimes, the Chinese biopharma will be able to bring us assets with hundreds, if not thousands, of patient experience. You just don't see that anymore. Most of the small biotech in the Western part of the world couldn't quite deliver that sort of a data package. Therefore, that gives them a lot of leverage in the negotiation in terms of not just the pure cash up front, but also the whole package, right? Oftentimes involve more participations and equity, et cetera, et cetera. So I think these late stage assets become increasingly competitive for the MNCs, and they all openly talk about there's no more China discount.
Yeah. One more trend, Frank, Jeff plugged your LinkedIn site earlier, which I agree is one that folks should be following. But there was a deal recently that you commented on that we were also sort of kicking around at BioCentury, which was the takeout of the China biotech Lenova by Sino Biopharm. Historically, there hasn't been a whole lot of M&A in the China market, and here, is I think a great example of more traditional China pharma acquiring a China biotech. Is that something you guys are expecting to see more of? Is that something McKinsey's been following?
It was not a surprise to us to see that type of deal finally come through, because I can be corrected by Mike or G or Simon, but I think this was actually the first sizable China deal, right, as an M&A. I think it's welcomed by the industry because it offers another exit for the biotech entrepreneur. Some of those large traditional Chinese pharma companies have very deep pocket, Many of them are in the process of transitioning from largely generics businesses to innovation businesses, whether they are state-owned enterprises or private companies, like, for example, Hungary, which is one of the most active names and probably ahead of many other companies in terms of making that transformation towards innovation. So, it's not a surprise, and it's a welcome addition, I guess, to the ecosystem, because we do need a capital market that works. We do need an M&A market that works. And this cannot just be China to the West. There also needs to be a healthy China to China ecosystem emerging in terms of transactions.
Yeah, I mean, actually, for the longest time, you don't see much M&A within the domestic ecosystem. And just simply because the traditional farmer has really hard time to value these early stage assets. If you have something very close to the market, they can tell you what would be the market penetration. They can give you a good sales forecast. But for these early stage stuff, they typically struggle. So
yeah,
that's
but they've been doing early stage deals with Western biotechs forever. So they do know how to put a value on them. They may have a different risk profile or something, depending on, I don't know, geopolitics, but they've been doing a lot of early stage deals for a long while.
Many of these probably are early technology and stuff like that in terms of like pipeline. If you ask the domestic farmer today, they're mostly looking for close to market stage, opportunity ex-China. So that's why this deal is very significant. And also it's more significant in light of the very, very hot Hong Kong Stock Exchange, right? Because a company like Nova, but they do have the other paths for exit, and they chose to be acquired by a domestic farmer.
Yeah. One other hot topic, obviously, that we haven't talked about yet is sort of the NewCo model and the NewCo deal flow. Love to hear your guys' thoughts on that. Mike, I know you guys were involved in the Windward deal, for instance. Any sort of insights on what people should think about in terms of opportunities for NewCos versus licensing deals?
Yeah, no, we were very excited to be part of Windward and to see that company grow and the opportunities there. I mean, I think there's still opportunities for NewCos. I think, as you've highlighted in your analysis, obviously the market is changing again quickly, and so the opportunities for groups who would back NewCos are changing, and I think that's also an opportunity for Harbour, and we're speaking with groups to really think about what's the next phase for NewCos. I think there's still an opportunity there. And it's really completes the circle of the conversation is really that with China biotech, there's a lot of opportunities for flexible deal structures, a lot of synergistic ways of working with venture, biotech all over to really ensure that we're progressing innovative therapies for patients. And so I think that you'll still see them, but the nature of those NewCos will be changing in terms of how the underlying deal structure of maybe licensing, the stage that they happen. And as we've also talked about how the nature of those collaborations and the involvement potentially of the Chinese biotech or Asian biotech will be as that NewCo matures as well. So that's, I think, an interesting space to watch, and hopefully we'll have some more news from Harbour in the coming months.
The other new phenomena in recent months, because of the Hong Kong Stock Exchange performance, many of the China private biotech are trying to go public. As Frank knows, there is a strict guideline in terms of what they need to do to qualify. So therefore, that's starting to affect if they would do a partnership to give away their lead asset, because they need to have like a phase 2 asset. So sometimes they would say, hey, we need to keep our lead asset because we're qualified to go public. So that becomes, whether that's a NewCo or a regular partnership, that's starting to have an effect on the management and board of these companies when they think about partnership. So it will be interesting to see how this evolves.
Yeah, it's been a great year for IPOs in Hong Kong. There's also been some activity in Korea, and I think together they outstrip what's been happening on NASDAQ. And how's the environment for follow-on financing in Hong Kong, G?
Well, that's an interesting thing. Frank, maybe you have more data point in that regard when you guys do your analysis. I think, as you said, this is coming out of a multi-year low, right? I don't know where is the expectation is when these follow-up financing started to happen, because, many of the stock I look at this year, they not only double, they triple, they quadruple from their low. So, at some point, I would think they will leverage the market to pull in some money from the market.
Yeah, no, we don't have the data yet. Our team is still working on the report we will present in Shanghai end of October. So you have to be at the summit, I guess, to get an answer to that question.
Excellent. What a
Excellent.
layup for you there, Jeff.
That's a layup for me. I mean, this has been a lot of fun. I would just like to say there's still time to register for the conference. It kicks off on October 22nd, and it runs until the 24th. If you can't make it to Shanghai, you can register to attend digitally. Head to BioCenturyChinaSummit.com to register and learn more about the program. I am still recruiting presenting companies. We'd love to get some companies from the US, from Europe, from Canada out to see firsthand what's going on. And we pride ourselves on having the right people in the room at our conferences. And it'd be a great place to talk deals, to talk financings. And, you get to meet Josh and talk tennis with Simone on top of everything else. And Josh, didn't we just add pre-event networking?
That's right, Jeff.
What is that? It's like visiting some kind of cool research park, isn't it?
We will, yes. So on the first day, our first morning before the conference starts, we're going to take a bus tour of Zhangjiang Park, which is the top science and technology park there in Shanghai. We're big believers in, you got to see it. I think you really have to see what's happening in China, see the scale, see how so many different companies from MNCs to China biotechs to CDMOs are all located there in the park. So that's a benefit of attending the event. And as Franck also alluded to, McKinsey, which is our longtime insights partner, will be releasing its conference report. Always a lot of data that folks like to get their hands on. So that'll also be a key feature of the event. And, lots of networking and opportunities for partnering and learning as well. So we hope to see you out in Shanghai, October 22 to 24.
Excellent. And lots of VCs will be there again this year, Josh, right? And quite a few pharma, BD&L people.
We have an unbelievable amount of Western VCs and biopharma execs coming out this year. And then, as always, sort of a who's who of China biotech VCs and CEOs, and all the MNCs, the big pharma will be there, both at the BD&L level as well as the China GM level.
Excellent. Well, I think this is a great point to thank our guests and sign off. Mike, I wanted to mention that we recently did an analysis kind of off the back of Simone's analysis that looked at who are the top deal makers, and Harbor was number one. Yeah. On the China biotech side, and was it AstraZeneca, Simone, that was number one? Yeah, G's shaking his head.
AstraZeneca by some way, but I actually, in terms of the licensees, of course, GSK was second. I actually want to make the point that BioNTech had also done a whole bunch of deals, so they are not a pharma, but they are dealing like a pharma, I got to tell you.
Yeah, and BioCytogen, again, on the China side, very, very active. Well, Mike, Franck, G, thank you so much for sharing your insights. Franck, looking forward to the report. Definitely put an extra pot of coffee on for Fang Ning and Josie and the team. And G, hope to talk soon. And as always, Simone, Josh, thanks for joining. And a special thanks to Kendall Square Orchestra, which provides the music for all of BioCentury's podcasts.